Okay, this will be here. No, it will be there better. Let me close the chat room. Okay, now everything is working fine. So look at this, guys. There are a lot of questions. We'll go through most of them and then we'll go to the trade review. The first question he asked, defining the price target. I am planning to go long. There is the previous day close above my entry point. Yesterday's high is 200 moving average, whatever is the, I mean, he means any resistance above his head. The previous day close gives me 1 R. Yesterday high would give me 2 Rs. 200 moving average would give me 5 R. How to define which should be my target? Not only for this example, but in general. So look at these, guys. When you are getting into any position, you should try to have at least 2 Rs to your first target. If you are getting, it depends on the strategy. Let me just draw this, what he said. Let's draw it here. This is the previous day close, which would give him 1 R, okay? Yesterday high, which would give him 2 Rs. And then moving average on the top. Now look at this. The price is going straight up. You want to take it to the long side somewhere right here. Your stop loss would be somewhere right here. Let's assume it bounced out of here. And then you have the previous day close on your way. What should be your target? In my opinion, if you take it to the long side right here and your stop loss is down here, the previous day close is right above your head, your first target should be 1 R. Why is that? Because people who got an early entry anywhere here, or even earlier than that, before in those waves, they will definitely, not 100%, but most probably, they will start taking partials at the previous day close. So you chasing an entry right here and trying to go for 2 Rs or 5 Rs on way further resistance isn't a good plan. You should take partial at the previous day close. Now look at this. The stock is going up. It's bouncing off the previous day close, forming some sort of ABCD pattern. You take it to the long side here. Your stop loss is down here. The previous day close is 1 R. Would you take a partial at the previous day close? For me, I wouldn't take partial at the previous day close. Why is that? Because I'm getting into an ABCD pattern. ABCD pattern is a breakout setup. If it's a good ABCD pattern, it will break the previous resistance, and I will definitely take partial at yesterday's high, which is the next resistance. I will not exit all there. I'll just take a partial right there. If it continues going higher, then I'll take another partial right there, but I will not take partials right here. So it depends on your entry and depends on the step. If you are chasing, it gives you 1 R to the previous day close to the first resistance, take partial at 1 R. If you are getting into a setup and it bounced out of it once, and remember this, the first time it goes into a resistance, usually it bounces out of it. The second time it goes into it, usually it breaks it. You just go for it. Then you don't really have to partial at this level right here. You could just watch the price action. If it's strong, if it's going through it with nothing, with no resistance, with it doing nothing, just continue holding. Then it just depends on your style, if you are patient enough. And I will show you like my trade from today on CCL. I was trading it with my trading buddy, or having that trade with my trading buddy. And on CCL, we were different. I took a good entry right here and I took a bunch of partials. My trading buddy, though, what did he do? He took an entry at 14.70 and he held it all the way to $14. Why did I start taking partials earlier here? Because with my entry here, after the add and the stop loss somewhere right here, around 5 cents stop loss, these 10 cents were 2 Rs for me. And I just decided to partial at 2 Rs, 4 Rs, and then just take all partials all the way down. While he was patient enough, he knew it's weak. He knew it could go lower. He knew it could consolidate and do a reverse ABCD pattern, so he held it all the way to $14. It depends on your style, but the first partial, it would be better, at least in my opinion, to hold for 2 Rs. Peter said he would take a partial at 1 R. I think you are taking a lot of partial. Is it your style, Peter, to take at 1 Rs, or you have another opinion on that? Just maybe. Okay. Jason, I will go through that trade in detail. So now, tightening the stop loss. In many videos, everyone says that if you are going heavy, you should have a tight stop loss. If you are going light, you give more space for the stop loss. How to define when to go heavy and when to go light? This is a great question. When people say I entered with a small position and set my stop loss wider, that means they did not avoid volatility and they did not get stopped out. If no, please explain. If yes, it sounds like gambling, and wouldn't it be better to just abandon this plan and go look for another trade? So first of all, trading is gambling. We never go into a trade knowing that this trade is going to work out 100%, right? We have probabilities, we have win rate, we have our strategies which work and which fail. So this is gambling, but what makes us make money here is the risk to reward. The second thing, it depends on your style and your strategy. For example, Andrew is a momentum trader, right guys? You could see that most of the time, or a lot of time, let's say right here, okay, this, let's assume this wouldn't be a good trade. Definitely, in my opinion, this wouldn't be a good trade, but let's just assume it's a momentum trade, okay? It's going up. Andrew says a huge ask on the level 2. Diamond sells, getting activity. It's breaking up here. So with his style, and momentum trade means he's trading the moment. He sees something at the moment and he trades it, okay? With his style, he believes that right after he enters, the stock will go into his direction. He knows that it will immediately work out. So he presses his hotkey for 5,000 shares, 2,000 shares, 10,000 shares, whatever he takes to the long side, and he intends to just quit immediately. If it goes right after he enters right against him, it doesn't work out immediately, he just exits for a small loss. He had a really tight stop loss there because he went in for the moment, he went in for the breakout, and then he starts taking quick partials. You could say, why would Andrew take partials 5 cents or at 10 cents? This is not a huge move. When he had 2 cents stop loss, this could be a good risk to reward for him, okay? This is the first thing. Now, Andrew getting long right here, he would not hold it for this daily level right here, 15.25, 15.20, or 15.30. Why is that? Andrew knows that his entry was late. He didn't get in early. He wouldn't be able to survive any pullback right there. So he takes partials quickly, and then once it goes against him, maybe it's still long. And he would tell you sometimes, I exited at break even, but I believe this is still a long. You hear him saying that in the chat room, right? Why did you exit if you believe it's still long? Because I know that it could pull back to the previous day close, it could pull back to the pre-market level, and only then continue going higher. So with an entry right here, I'm not willing to hold it all the way right here and then enter and then just hope that it will go back into my direction. I know it's strong. I believe it's strong. I believe that it might go higher, but it could also go against me, right? I better exit break even because I went in for the moment, I got in my profit, and now I'm just going to wait for another entry. This is trading the moment, and that's tightening the stop loss and going heavy because you went in for the moment, okay? Now, if you are getting for a trend, let's say, and you are getting in with good entry right here, you don't go for the moment. You know, you see it forming double bottom here, double bottom setup, okay? It's getting some side of a slightly increasing volume at the low of the day. It's making a new high. You would take it to the long side for a double bottom strategy, but what will be your stop loss? You're not going in for a momentum play, right? You'll not have 5 cent stop loss or 2 cent stop loss. You saw that this was the low of the day. This is the support area. You would put your stop loss somewhere right here or below the bodies. If it goes against you, you are willing to let it go against you. You know it could consolidate, and then it will go back in your direction. If it does that, you'll take partials at the risk to reward, okay? So here, you go in with smaller share size. You give your stop loss more room, and then you go in for a bigger reward. Here you go in for the moment, you go in heavy, you have really tight stop loss, and you start partialing. You know you will not survive pullbacks. Here you know you're getting a good entry. Like here I knew I'm getting good entry, here I knew I'm getting good entry. Just give it some room and hold it there. If you get in here to the short side, once it started dropping heavily, you went in for a scalp. You know that it might reach right there, but you know it's going to do some consolidation before going there. You will go in heavier, you'll have tighter stop loss, and you'll partial on the way. So let's get back to those questions. Candles, the price is going down and I can see double bottom forming. You say the best entry is a new high, same as ABCD pattern. What do you mean a new high? The wick, the price action, the body candle, when new candle crosses the open, the 1 minute or the 5 minute candle? So this depends. For example, here you have a double bottom. Great question. Do you have double bottom right here? What's your entry? Let's say you have a wick here. Okay, my entry with my style, I don't wait for the break of the wicks. I wait for the break of the body. If I have enough confirmation and the price action breaks the body, I take to the long side. So the new high for me is the high of the body. Would I wait for a new 5-minute high? Definitely no. I'm seeing a pattern on the 1-minute chart, so I'm trading it off the 1-minute chart. If the double bottom on the 5-minute chart, I would take it on a new 5-minute high, unless I have many confirmation candles on the 1-minute chart. Sometimes the entry is the high of the wave for me. For example, I see that it's going to view up, I see that it's dropping right here, and I see that it's more weak than it's strong. I believe that it might make then it might break up. Would I take it to the long side at a new 1-minute high? Not really, because I'm afraid it will do an M shape below view up and drop down. So in this case, I'm going to wait for the break of the wave before I take it to the long side. Wait for the break of the wave, take it to the long side and get stopped out. At least in this example. 1-minute open range breakout. In educational videos, Andrew said that he doesn't take a 1-minute open range breakout and no one should do it. Recently, I started seeing in many recaps that people started trading in the first minutes after the market opened. Has the game changed? Is 1-minute open range breakout a good strategy now? It's not that it's a good strategy now, and it's not that it was a good strategy back then. The more you trade, the more you watch the price action, the more experienced you become, and you are able to trade of smaller time frames for 1-minute open range breakouts, 2-minute open range breakouts. As a beginner, when I started trading, I wasn't even taking 5-minute open range breakouts because I just couldn't trade them. Now I'm trading even the first minute, sometimes the first few seconds after the market opens. The longer you trade, the more sense the market makes, and if you feel that you are understanding and you are good trading 1-minute open range breakouts, you could trade them. If you see that it's difficult, Andrew does well on them, he makes a lot of money on them, but you lose on that 1-minute open range breakout, it means that maybe this is not your edge, this is not your niche, just avoid it and look for another setup which suits your personality. The game didn't change, and it's still the same as it was before, right? Maybe more algos are here now, a little bit more difficult to trade for some. I didn't trade back then when there were no algos. I started trading 2 years ago, so for me it's still the same. Taking partials. In one of the videos, Carlos was talking about Andrew's trade where he was shorting. Andrew covered all his position at previous day close at 1-to-1 R. Carlos was saying that it would be way better to cover 50% and let the price run lower to the moving averages for 2-to-1 risk to reward. You told me Andrew is a momentum trader and it's different, but now to me, how to me as a normal person to this situation? Again, it depends on your trading style. And by the way, Andrew is not only a momentum trader. You could see that sometimes Andrew is getting into trades and he's willing to let them go against him for a while, right? Andrew trades different setups. If he is getting into momentum, you could hear him saying that I'm bailing out on this thing. It's not working right now. It's taking so long. Why would you say it's taking so long when you've been in a trade for 30 seconds or 40 seconds? That's not so long, Andrew. I mean, trading the moment, 30 seconds or 40 seconds, and the stock is not doing what he wanted to do, it's so long. Sometimes he's getting into a trade and he's waiting for 4 minutes, 5 minutes, and he's waiting for the consolidation. Different setup, different strategy. The first one, he is not willing to hold, he's going for the moment. The second one, he's getting into a double bottom, into ABCD pattern, where he's willing to hold to the C or to view up or any level right there. For you as a normal person, it depends on your style. If you are trading ABCD patterns, you could go in closer to the C, you could partial at the high of the day and above at daily levels. It depends on your style. I can't tell you where to take your partials at, where to put your stop losses, because it's different for each setup and each style. Moving averages. You look at different time frames at the same time. From 1 minute to daily, which time frame moving averages do you use? If all of them, wouldn't it be too many support resistance levels in your chart? You are right about this, and I'll talk about this right now. If the price is stuck between moving averages, would you still enter the trade? Now look at this. I will go through this and I'll explain CCL at the same time. Look at this. CCL opened so strong, and I saw it opening so strong. Why did I still take it to the short side after it made this move right there? They had bad news, right? Almost bankruptcy news. It's not been doing well lately, and I saw it opening strong. What was this move here? To me, this move was people taking their partials. I expected it to open strong at the open. After this huge drop, I didn't expect it to go even lower at the open. I knew it will do some sort of pullback or move to the long side, and I wasn't sure 100% of it. But this was my analysis. Who would want to take this thing to the long side after bankruptcy news? So looking at this, I decided to take it to the short side on a new 1 minute low, tight stop loss and got stopped out. Then I saw that it was actually not going so strong, and I took it to the short side against moving averages. You see here, I took it against moving averages. Why wouldn't I care about those moving averages right here? Because it didn't care about them at the open. It went through them. Why would it go or bounce out of them on the way down? If a moving average is respected, then I would pay attention to it. Is it the 1 minute chart, the 2 minute chart, the 5 minute chart, the 30, the 15? It depends. If there is a clear trend, let's draw something. This is the 9 moving average in the 5 minute chart. The price is going up, let's say. Oh my god, this is horrible. It's going up. It's way far from the 9 moving average in the 5 minute chart. I would assume that maybe after it drops, this is the first strong moving average. And by the way, the 1 and the 2, I don't care to the 9 and the 20 at all, especially at the open. Not at the open, especially later on the day, because it could bounce out of them. Sometimes there is a really clear move above the 9 or the 20 on the 1 and on the 2 minute chart, but I don't pay attention to them. I pay more attention on the 1 minute chart to the 50, on the 2 minute chart to the 50, on the 5 minute chart, the 9, the 20, the 50, all the moving averages, depending on how they look like. If they are this choppy, you see they are crossing here, they are crossing here, like this is horrible moving averages. At this moment, I don't care about moving averages at all. I don't care about the support and the resistance. Now that it dropped a lot right here and it started its trend, I would pay attention to the 9 moving average, and I would pay attention to the 20 moving average and the moving averages on the other time frames. Let's see MU, for example, a trade I've taken there. MU, I did pay attention to the 9 moving average right here. I mean, will this be recorded version? Yes, it will be recorded on YouTube. Here I did pay attention to the 9 moving average in the 5 minute chart, because after a strong move, I expected it to pull back to the 9 and then bounce out of it. It didn't do that, and I was happy about it. But I thought it will. Looking at this, the next support I have the 20 on the 5 minute chart, then the next one I have is the 9 or the 20 on the 15 minute chart. Yeah, I think I was happy with this one. So, pre-market, the stock hits the gappers list. Good volume, good catalyst. You can see a trend in the pre-market. It looks pretty good, but the candle have pretty long wicks. What do you do with stocks like that? Discard them? I don't discard them. I try to see the general trend. Let's say you have a 9 moving average or 20 moving average right there. It's wicky. It's horrible, right? Sometimes buddies, sometimes engulfing to the downside, sometimes another weeks. So I try to look at the general picture, and I see that it's a little bit more trending to the long side than it's trending to the downside. It had good news, it gapped up, it's wicky, but it's more strong than weak. I will not discard it. If it's so choppy in the pre-market, I will look at the daily chart, because most of the time my trades, they are based on the daily chart. Let me see what I think I traded Codex yesterday. Yeah, I took Codex yesterday to the long side. So looking at this on Codex, I saw that it was chopping on the daily, it was doing nothing, and now it's breaking up. Yesterday it gapped up, and I saw that there was literally no resistance between this level and the high right here. I was long biased on it. Why? Good pre-market price action yesterday, gapped up on the daily. Right before the open, it looked so good. Let me show you what it did on the open, because I took it to the long side yesterday. Good in the pre-market, squeezing up at the open right here. I took it to the long side, and look at this. It had no resistance all the way up to 1570. It bounced out of 1560. But yeah, you see this? Good daily chart. The good pre-market action, not good looking at this, but at the open it got more clearly, and that's what made me take this thing yesterday to the long side. If it opened weak yesterday, like good news, gapped up, but it opened weak below the moving averages, I wouldn't take it to the short side. Why is that? Because I would assume that this thing is strong, maybe it's dropping right at the open, it will hit one of the support areas, maybe the 50 on the 5, maybe the 200 on the 1 on the 2, maybe the any moving average on the 15-minute chart, and then bounce out of it and make the move to the long side. If the daily chart is looking so good to the long side, I would not discard it, and I will not go against it. If it starts getting choppy and it does something really weird, I will just discard it and watch something else I have. Let's see which the CHGG. Let me zoom this thing out. Yeah, this is a good example. Stock is going up. You see, it's going up. Why wouldn't I short it here? Even if I short it right here, it's not good risk to reward. But even if I short it here on this new low, my target will be the 9 with the 5 because this is a clear trend. And I would expect it to bounce with the first support right there. You see, it's bouncing one time, it's bouncing a second time. Now it finally broke it. Then I will pay attention to the 20 on the 5. It breaks the 20 on the 5. Then I'll pay attention to the 9 on the 15. So this is my sequence of watching the moving averages. The 50 moving average on the 1 minute chart, the 9 moving average on the 5 minute chart, the 20 moving average, sometimes the 200 moving average. Let's say this is the 1, this is the 5. The 20 moving average on the 5 minute chart, sometimes it coincides with the 200 moving average on the 1 minute chart. Then I go to the 9 moving average on the 15 minute chart. Then I go to the 50 or to the 20 moving average on the, this is the 15 minute chart, this is the 5 minute chart. Yeah, and if the stock is really trending, this is the sequence which I'm watching it at, and those are the levels which I try to pay attention to for bounces or partials. Now, for how long these stocks are valid for trading? 30 minutes, 1 hour, after the open, for all day, or until the behavior changes? Until the behavior changes. If it opens strong, or weak, and it's clean, I would pay attention to them. If it's starting to chop around, doing nothing or trading in a range, I'll definitely discard them. Sometimes they could be in play for the whole day. Sometimes they could be choppy, because of which I will avoid them. Later on the day, they break to one of the directions and then they become in play. Risk to reward. Planning my trade with 2-to-1 risk to reward. I enter the trade after 10 minutes by looking at the price action. I see the price won't reach my target, and I exit the position at 1-to-1. Andrew said that after entering the position, we receive more information, and that might change our plan. Would it mean that my initial plan was wrong? No, it wouldn't mean that. Shouldn't I have entered the trade? This is the problem. You never know how much the stock is going to go. Maybe you are planning a 2-to-1, but then you are getting 10R. Maybe you are planning a 2-to-1, and then you are getting 0.5R. The most important thing is to plan it well, to have your entry, to have good risk to reward, and to have a stop loss. When you are in the trade, you try to hold to your target. If the plan changed, if the stock isn't doing what you expected it to do, you could always exit with a smaller loser, with 4 loser, or with a smaller winner. If it does whatever you want it to do, then you will definitely hold it to 2-to-1, right? That was your plan. But the plan changed, so you don't know what's going to happen in the future. You can't tell, shouldn't I have taken it or should I have taken it? If all the criterias are there for your setup, then just take the setup. If they are not there, then you shouldn't have entered the trade. That could happen, Dave. I mean, for example, here on my MU trade, what was my target? My target for parabolic reversal was the 9 moving average and the 5 minute chart, but I still held 30% of my position and a partial it lower. So my goal was here. It did give me more than my goal. That will happen to you. Sometimes you aim for something, but you get more than you aimed for. And sometimes you'll aim for something, but you will make less than what you aimed for. When I enter trade, I always have set $20 risk stop loss. So like you said, minimum risk to reward should be 2-to-1. My reward should be $40. If I put tight stop loss, I get subbed out. If I put large stop loss, I can't reach 2-to-1. Now this comes to an importance of good entry. What if I took MU to the short side here? Once it did a new 5-minute low below the wick. That was my stop loss, and that's my target. This is 1-to-1, right? If you hold to 2-to-1, you will reach it in this case, but most of the time you will not reach it. It's so rare to have stock V reverses that much right there. That's why you can't enter right here to the short side and have a tight stop loss right here, unless you're going for a momentum play, right? So here, the importance of good entry. You need to have your setup, and you need to be confident when you have the criterias there for your setup. I saw that it was parabolic. I saw a daily level on the way. MU, get back there. I saw daily level on the way. I saw sort of increasing volume below the previous day close. Reverse hammer, it can't break up. I saw enough confirmation for me, and then I just took it to the short side at a new low, with a tight stop loss. What stop loss here? It was around 5 cents stop loss on this thing. I had a tight stop loss, but my tight stop loss, it was technical level, right? I didn't put my stop loss 2 cents right here or 3 cents right here. I put it at a technical level. If it breaks this area, most likely it will break even higher, and then I just held it for my risk to reward. If I take it to the short side here, I miss this entry and then it dumps a lot, and I take my entry at 46.80. What should be my stop loss? Same thing, it should be somewhere right here at this area, 46.92. I can't get a late entry and have a tight stop loss and then get stopped out. So I think you would need to just work on your entries. If your entries are good, they are not silly. I really like those questions, and that's why I plan to share them here. I think a lot of members would appreciate it. Now, 5-minute open range breakout. When the market open, there is a large candle holds the price above VWAP, and I'm planning to trade using the 5-minute open range breakout strategy. The price pulls back, I enter with a small position, 2-to-1 risk to reward, and in the most of the videos, guys say to enter again with a bigger position once I get confirmation. I don't do that. I usually enter with the same risk to reward, fixed risk, the one which I risk. What is the confirmation for that? I will share something with you right now. The confirmation is your playbook. For me, for example, the opinion range breakout, the opinion candle should be smaller than the average true range. The candle closes above or below VWAP, but not so far from VWAP. Confirmation depend on the open range breakout you are trading, whether it's a 2-minute, 5-minute, 10-minute, 15-minute open range breakout. It should break the high or the low of the previous candle. For me, it's not the wick, it's the body of the candle. A mini ABCD pattern on the smaller time frame charts. So let's say you're going for a 5-minute open range breakout. This is a wick here, this is there, okay? I want to see inside it, sorry about this, I want to see some sort of ABCD pattern inside this candle. Once I see an ABCD pattern in a smaller time frame, that's my confirmation. Small ABCD pattern, maybe you could see an ascending triangle on smaller time frame. So this is the first 5-minute candle, this is the second 5-minute candle, and you are having an ascending triangle inside these, chopping around, getting tighter, and then it breaks out. So I want to see a mini pattern inside a big pattern. If this is the 5-minute candle and it's going straight up, 1, 2, 3, 4, 5 candles, then the next candle opens and it makes a 6 continuous candle. I don't like this open range breakout. I wouldn't take this thing for a 5-minute open range breakout because I would expect it to do a pullback before it continues going higher. This is a chase because this would be a bad stop loss. Why is that? Because I will not be able to tighten my stop loss. If I see, on the other hand, a smaller ABCD pattern inside it, I would be able to take it to the long side and put my stop loss at the C. I don't need to put it at the low of the 5-minute candle. I'll put it below the mini pattern. This is from Excel. If you wanted, you could email me. I'll send you some of those. I'm working on a new version of these, but I'll send the ones I have. This is not my playbook. This is some rules for some setups I had before, but I'm working on a better one now. I've been working on it for a long time and I'm just too lazy to finish it. I could share those ones for now. Now, time and sales. Time and sales is mad and it's hard to say what's going on. Do you set your time and sales windows to show more than 100 trade shares to reduce the noise? In time and sales, green means buying above the price, red means below. Green doesn't mean buying, it means orders went through the ask. Red means order went through the bid. It's not really necessarily means buying or selling. How to react to a lot of shares going through in black inside. This is not really important for me. This all is not really important. I really care about the order flow in the time and sales. If the time and sales is going with small pace, small pace, small pace, I don't really care about it. Now I'm seeing it forming, let's say, an ABCD pattern. It's getting to a breakout area, and at that breakout area, the price action becomes faster and faster and faster and faster and faster. That's my signal that a breakout might happen right now, and I get my entry for a breakout. Other than that, I don't really care about the color. I could care about the share size. Closer to a huge, closer to a breakout area, huge share size are flowing in. That would be interesting for me. Other than that, I don't really care about the time and sales. At least that's for me. Volume, all of you guys said that good entry should be confirmed by larger than normal volume. It's an indication, it's not a must. Sometimes we're seeing a good setup, but the volume is not really there, it's not confirming it. It's still a good setup if you have other criteria ticked in. The volume isn't there, it's okay. If you don't have a lot of criteria there and you don't have the volume, then it's a bad step. Maybe you have the volume, but you don't have one of other criteria. It's still a good setup. But usually you can say that the candle had a larger volume than normal after it closed and after you're late to enter. Now this also depends. Let's say you're having really small volume on 1 minute candles, okay? Now the candle still didn't close. It's still 20 seconds for this candle. It's still going on, but the volume is already as high as the previous candles. You could see here that the volume is larger than the previous volumes, because after 40 seconds, it will definitely be larger than those ones. That's how you read it. When you look at the 1 minute candle, do you look at the volume after 30 seconds and comparing it to previous candles? Same about the 5 minute candles volume. Yeah, I just look at the volume after a few seconds. You can't tell that the volume is coming in right in the first second. Sometimes if you see the order flow going faster, like faster than it was going on the previous 5 minutes, you could assume that this candle will have more volume because the order flow on the time and sales is larger than the previous order flows. For example, I looked at the 1 minute chart, the candle is closed with 10,000 shares, a new candle opened after 30 seconds, it's already had 7.5. I think it's made 7.5, 1 minute total. Yeah, that's smart. Yeah, exactly that. It's not I mean, a huge difference in volume between 10 shares and 15,000 shares. I mean, if it has in this range, like between 10 and 30,000 shares, that's a really huge volume difference. In the last 30 seconds traded. Yeah, you see, that's what I told you. It's like not so crazy. Between 10,000 and 15,000, it's not huge difference for confirmation. If you have 10,000 shares on the previous candle and then on the next candle you are already having 15,000 in 30 seconds, that's really meaningful. Do you use the relative volume? No, I'm not using this one. So yeah, that's it. Thank you, Robert, for sharing those questions with us. I hope this was helpful. And you usually have certain bias whether the stock is strong. Yeah, I do have that. Does this mean that at the open you will... Exactly. Right at the open IG, I'm trading the stock in the direction of my bias. Later, after the open, after the momentum is done, after it started forming some setups, I could go against the direction of my bias. Now guys, we'll go through the trade review session. We will go for one trade for each. Sorry about this. And if we have time, we'll go through the rest, just to be fair to everyone. And let's go. So Lenny, you're welcome. Lenny traded W. I saw W today, and by the way, W, I was long bias. I saw it was uptrending in the pre-market. The trend was really good. So in my plan for this thing was to wait for it at the open to break up, since it was uptrending with no pullbacks. And if it opens with no pullback to the long side, I would expect it to do a pullback, and I would take it for an early parabolic reversal at the first 5 minutes, or the first 3 minutes, or depending on that. But unfortunately, at the open, it didn't break up. It consolidated in a range, and it started dropping down. It got into the 9 moving average on the 5 minute chart. I liked it for a short, somewhere right here before the moving average crossed. But I didn't do that because I wanted to see a pullback to the 50 moving average on the 1 minute chart. It was a little bit slow, not as active as I expected it to do, so I just avoided it. But looking at this, the moving average crossed, it pulled back to the 50. I like this. Once the stock breaks the 50 and it pulls back to the 50 and holds it, that's my confirmation to take it to the short side. So these both were really good shorts. I like them. One thing though, you had a really tight stop loss on this one. At least this week right here, you could just tighten it a little bit up there, a little bit below the wick, but this was really tight. The next entry was a good one. I like it. And then I see you took some partials. Now, let's see Dalton. Dalton traded LB, and I like this. This is not bad actually. So let's zoom this out. The stock was strong, right? You see in the pre-market, it was uptrending. And right after the market opened, you see the market opened. Let me get this smaller, it will be better. Yeah, the market opened and it continued going higher. This is the thing which I wanted to do on W. Stock is uptrending in the pre-market. At the open, it breaks up and then it starts losing some steam. It starts dropping down. That's what was my plan to go on W to the short side for an early parabolic reversal. But that doesn't mean I'm short bias on W. I'm still long bias on it. Looking at the pre-market, it's more strong than it's weak, but it just needs to do some sort of pullback. And that's it. It dropped down to the 20 moving average on the 5-minute chart, started holding some level right there for a long time, and you took it once it broke the descending pattern and made a new 1-minute low, new 2-minute low, and your target was, I'm not sure what this, let me see what you said, LB gap down. Oh, it gap down actually, but was showing strength leading into the open. After it opened, it sold off, which I expected, and then kind of held and consolidated. You went long on a new 2-minute high, stop loss at the low of the previous 2-minute candles body, and you added when you saw another consolidation. This was a smart add, I like this. You could see even in the 2-minute chart sort of consolidation, sort of flag or 3-bar setup on the 5-minute chart where you added and then you partial all the way to the high of the day. This was a good trade and a smart trade. I like it. Let me see, I think I avoided some. Is it a falling angel? It's not a falling angel. It is the idea of a falling angel, but the falling angel is set up for low floats stocks, not for high cap stocks. So I wouldn't really call it falling angel, but yeah, this is the idea behind it. Hey man, is it true that Jared Wesley will be coming on for a guest presentation? I heard someone mention it in the live chat. I missed the pre-market today, unfortunately, but if it was mentioned there, then yes, he will be coming as a guest. Yeah, exactly, Ryan. The pattern is the same, and this is the criteria for a falling angel. Stock is so strong, it's dropping down, finding some levels, and then it's squeezing back up. This is the criteria of falling angel, but it's better traded on low floats, I assume. So Charles, let's see what you did. You traded CCL to the long side, and look at these guys. Charles took it to the long side, I took it to the short side, both made money, and then you also took it to the short side. So you went long because you saw a lot more asks than bids. So he saw signals on the level 2, and the SPY dropped at the open, but CCL stayed strong. So good signal on the level 2. He saw independence from the SPY. It broke the pre-market level, took it to the long side, broke the level right here or new 5-minute high, took it to the long side and partialed all the way up, the rest at break even. You wanted to go short on the second, I can't read this, on the second red arrow, which was breaking a new low. This was your intention to take it to the short side, and then you partial to the downside, and I like this. You could see here, it dropped a lot, right? Reverse ABCD pattern on the 1-minute chart, and an engulfing crack on the 5-minute chart. You see these guys? You see a pattern on the 5-minute chart with a risk to reward on the 1-minute chart. So you take it to the short side here, put your stop loss somewhere right here, and look at this. Your stop loss is here. You don't need to put your stop loss at the high of the 5-minute candle, because you see a pattern on the 1-minute chart, you see a confirmation on the 5-minute chart, and you could put your stop loss based on a smaller time frame. Now, what's the difference between this and this? If it was going straight back down and you take it to the short side, that's a bad entry. That's chase. You are getting in with no pullbacks, with no good risk to reward, with no good stop loss. But here, that was smart. Wouldn't 50% be supposed to be 50% of bearish crack? Yeah, you could use a 50% somewhere right here. But if you see a pattern on the 1-minute chart or setup or more technical level on the 1-minute chart, it's better to use it instead of using the 50%. What if the 50% is here? Let's assume it. It's not there, but let's assume. The 50% is somewhere right here. Looking at the 1-minute chart, you see that it's going through this level a lot, right? This wouldn't be a good stop loss to have, even if it's 50%. Let's say the 50% is here. Just assume it. This is not a good stop loss. You see that it's consolidating here. You see that the level is actually here. Why give it so much room? Yes, it's 50%, but you're having a better technical stop loss. Better use this one. You're welcome. Now, Han, what did you do? You traded SPXL, and I assume this was a parabolic reversal. You took it. I like this. This was a really good one. You see a huge wicks on the top 3 times. You take it on a new low. You put your stop loss above the bodies, and I would have done literally the same thing right there. But sorry, something went to my eye. But unfortunately, it's making a new high, getting above the bodies, and gets you stopped out. That's totally fine. This was a good trade. It just didn't work out. Then you are trying it one more time to the short side right here, assuming that it didn't fail. It's going below the bodies, putting your stop loss at the same place. Still was good, but I wouldn't do this. I'm not sure I would do this. Maybe I would. It's not looking bad, to be honest. You take it to the short side. One thing I would have done here for sure is exiting at break even, because it went down to the 9 moving average into 2-minute chart, and look at this. This candle isn't a good sign. This candle here, this is a bad sign. It's looking like a hammer right there. Then it's coming back up, new 2-minute high. I would have bailed on this right there. Now here, this was a good one. I like it. Why is that? You have a double top on the 1-minute chart, a lot of wicks right there, selling pressure, a little bit late entry. If you could have caught it somewhere right there, this would have been like really good one. Perfect. I assume you waited for a new 2-minute low. That's why it was low, late. And then you partial on the way down. What's the risk to reward you got in this one? These arrows are not moving average crosses. Yeah, these arrows aren't moving average crosses. These arrows are triangles, are orders. Short, stop out, short, stop out, short, partial, 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 stop out. I'm on to extended question. You said if there is a double bottom, you enter on a new high body, but once you get filled on a stock, doesn't go up and chops around the 5-minute chart. Will you exit the trade with a small loss, or you would still wait until your stop loss hit? It depends on how the candles look. If it's just chopping around with an engulfing after an engulfing, I would hold. I don't care about it. If, let's say, it formed a double bottom, you see here, but then it's starting to form those type of candles, chopping around with huge selling pressure, then in this case it's starting to descend now. So I will not hold to my original stop loss. I'll just bail on the trade. If the candles are normal, just bodies engulfing after an engulfing, it's doing nothing, I would hold to my original stop loss. Perfect. Valentin traded NCLH. Let's see what you did here on NCLH. Now this is it. I see it. It dropped down closer to a daily level, came back up, dropped back down, and I assume you went in for the break. But look at this. You see this entry right here? Yes, it's the second time getting into support, and on the second time, most likely it's going to break it. But look at this move. This move isn't small. This is a chase. You went in for the breakout so late. If it did this, and then it did small pullback and came back down, and then you take it for the breakout, that would be good because you will have a good stop loss. You will be able to survive pullbacks, and then you will go in for the breakout. Taking it to the short side here for the breakout, what's your stop loss? You can't have just any stop loss you want, like either here, either here, either here. I mean, this is the stop loss. It's just going straight down there, right? So it's going down, you took it to the short side, and look at this. Why would I exit this at break even? Anyone? Let me zoom it in. In this case, I would exit, not at break even, maybe for a small loss. But can you tell me why? Exactly, Javon. That was fast. You see here, this is the low of the day. This is the low of the day. It's breaking the low of the day, but it's not weak to go down. It's hitting the next support right here, right, Ryan? Good job. It's hitting the support, and then it gets back into the range. Because of that, I would most likely get stopped out right on this candle for a small stop loss instead of holding it to my original stop loss. Now look at this. We said that this was the technical level because here it was going down with no pullbacks, right? If you take it to the short side here, it should be the stop loss. But this is bad risk to reward, like having, I don't know what's that, 40 cents or no, it's not 40 cents. It's around 20 cents. Having 20 cents stop loss is a little bit too much. Not 20 cents. That's $1.20. Whoa. So yeah, I wouldn't have shorted this thing here because this was a bad risk to reward. Now looking at this here, that is starting to consolidate, this wouldn't be a bad stop loss entry right here with the stop here. You would get stopped out, and this wouldn't be a bad entry right here since it's doing now a fake breakout. You see, this is a fake breakout. Then it's getting back down. This would have been a good short right there. I see you actually caught it right here. Now this entry was good. Look at this. You see the difference between this entry and this entry? They are both the same. But why is this a good entry and this is a bad entry? This is a good entry because you have a defined stop loss, a small risk right there, a consolidation area around you. You are going in for the breakout for a descending triangle setup, and you put your stop loss above the consolidation. Here, it's the same thing. You are going for a breakout, but it's not around the consolidation area. This is the pullback here. No risk to reward there, good risk to reward here. So yeah, this trade was amazing. Good job on this one. This was Valentin. Now let's see what J-Bond did. And then we have Drew. So J-Bond traded DAL. You try to take it to the long side. Let's see what you had there. Now this is one of the rules where I don't take this parabolic reversal. I see what you mean. I mean, first of all, it's not so extended. There is room, and the risk to reward is there. Looking at this entry right here, 9 cents stop loss with a target of 50 cents. That's 5-hour trade, which is amazing. I like that. Parabolic on this is, let me read. Parabolic on the 2-minute chart. You look at this, guys. It's dropping down with no pullbacks on the 2-minute chart as well. Hanging man on the 2-minute chart, or hammer on the 2-minute chart. You see it here. This is a hammer. Climactic volume on the 1-minute chart. Actually, yeah, I didn't. This was actually good. Look at this, guys. You see the volume closer to the low of the day? This is increasing. Now, this is good confirmation. Extended enough from the 9 and the 5 to give him a good risk to reward. Entered at a new 2-minute high. One thing which I wouldn't have liked when I take this thing to the long side is this. The horizontal moving average, and I don't go against horizontal moving averages, but this horizontal moving average could have been also a good reward, a good target for this long. So yeah, it wasn't a bad one, just didn't work out. Look at this, dropping down with no pullbacks after a breakout, hammer at the low, increasing volume, new 2-minute high, good risk to reward. Only one thing I don't like, other than that it was all perfect. Drew traded DAL. I mean, I saw double bottom on the 1, 2, and 5-minute charts, but I was nervous about the number of moving averages I'd have to go through. Stop loss 21.95. Now look at this. When you are going into a reversal pattern, you will definitely go against moving averages. You can't go into a reversal with no moving averages ahead. So if you have the criteria, you have everything there, and you go in for a reversal, don't care about the moving averages. With the first moving average, when you're going for a reversal, your first wall is the 9 moving average on the 5-minute chart. But you see a daily level, you see an increasing volume at the low of the day. You see that it tried to go to the low of the day. It's having again an increasing volume, but it's failing that. You're going in for a long with a double bottom, second bottom higher than the first one. Your first wall is the 9 moving average in the 5-minute chart. Once it breaks the 9 moving average in the 5-minute chart, I will be calm. I have moving average. Cross the 50 with the 9 and the 20. The first wall I have is the 20 on the 5, which will be my first target when I go into reversal. Then the 9 moving average on the 15-minute chart. Then the previous day close or view up. So yeah, this was amazing trade there. Did you say you'd wait? No. I said that the first wall in your direction, there are enough indicators here. Increasing volume, double bottom, second bottom higher than the first one. Maybe I would wait for the cross of the 50 moving average with the 9 and the 20. But if not, and I get an early entry, I would be afraid only of the 9 moving average in the 5-minute chart. If I get enough risk to reward, I would take partial at the 9 moving average in the 5-minute chart. If not, no worries about that. You are going into a reversal. This is the only wall, and if it gets through this wall, which it was respecting this whole time, it will be enough good. And that's it. It's going against it, it's breaking above it, and that was a good risk to reward there. Mark, trade 1, chased long for the break of the high of the day, had a wide stop loss because had a bias. It would be good trend all day. So you took it to the long side at the break of the high of the day, and you thought this will be a good trend the whole day, and I like that. I saw Microsoft, I saw the daily on the Microsoft. It looked really good for a breakout and for a trend. Unfortunately, it didn't do that. You got in a little bit late right there, right? This was your stop loss, and you got stopped out. Then you saw it holding this moving average right here. It did a bounce on the 2-minute chart. Your bias plus confirmation candle on smaller time frames, you took it to the long side, partial closer to the half day. These partials aren't bad. With this good entry and with this type of stop loss, this was a really good risk reward. I like this. This I'm not sure I would have taken, because looking at this whole day, what it was doing, how toppy it was, it started making lower high waves, lower high waves, lower high wave. I'm not sure I would have taken it to the long side right here. It's a little bit scary for me, at least. I see this candle bouncing over daily levels. You had a really good risk to reward. You took it and it made you a good risk to reward, and you made it a winner. But personally, I would have been a little bit afraid taking this thing. That was an ad. Okay, if it was an ad, no worries. It's always easier to risk the unrealized money, right? Exactly. So Holly, let's see what you did there. You traded Disney to the long side. I see that you took it on a new 5-minute high above the body on a 3-bar setup right there. Bought it closer to the support. What was your stop loss here, Holly? If I had taken this thing to the long side, I'm not sure where I would put my stop loss, because this is not the technical level. I would just give it some room if I am really long bias on this thing at the 50 moving average on the 1-minute chart. So basically that's it. Right after you entered, right? I think it was a little bit lower by that time. This was your stop loss. This is the 1-minute chart. This is the 50 moving average, the orange line, right? Or it's the green line. Oh, sorry about this. This is the 9, this is the 20, this is the 50, the green line. This is the 200, I assume. Unless the dotted line is the 9. Okay, that's got me a little bit confusing. The orange line, okay, that's good, it's the orange line. So yeah, that was a little bit of a really tight stop loss. Looking at the 1-minute chart, it's chopping around this. It could have just made a few cents drop and it would have got you subbed out. At least, and I would have made it the low of this week right here. I would have bailed a little bit earlier. Of course, because this would look like it failed. It did a new 1-minute low, and once it does a new 1-minute low, I'd expect it to go at least to this moving average right here. But yeah, I would have put it right there just in case I get slippage, because if you lose there, if it goes against you, you'll definitely get some slippage and you'll lose a little bit more than expected. But you got a good move right there. This long here, I wouldn't have taken it. Why is that? I could see why you took it. It was going up, it pulled back, was going back again up, and it pulled back, and you took it after the pullback. But this is a pullback on the 1-minute chart on a 1, 2, 3, 4, 5, 5th consecutive green candle with higher highs and higher lows. This is just so extended, and it needs to do a pullback at one time or another. So yeah, these longs, I don't think I would have taken them right here. I would have waited for a pullback before I take it to the long side. The first trade though was really good. Yeah, I see that. So Hamza, what do you do there? mRNA, first trade, strategy 5-minute open range breakout down, confirmation below the first candle. And look at this, guys. This is actually one of the good open range breakdowns. You are having sort of penet right there, a pattern on the 1-minute chart, okay? Small body candle on the 5-minute chart, close to view up, making a new 5-minute low with a break of the pennant on the 1-minute chart. Good short, and you took partials all the way to the moving average down there. So yeah, this was smart, and I see that you exited all there. Why did he exit all there? Because he wasn't trading off the 1-minute chart. His entry was based on the 1-minute chart, but his target was based on the 5-minute chart. He saw that this could act as a strong support. Yes, there was daily level there, but the daily level was way below the moving average. It started respecting it, closed as a hammer, took the rest of right there. So yeah, this was good one, Hamza. Yeah, this was pretty obvious. That was good one. Ram, let's see what you did. Zoom. Okay, so it was dropping down. If it was enough extended from the 9-moving average in the 5-minute chart, I can see the 9-moving average in the 5-minute chart. This was a really good entry. I would have put my stop loss right below the body, below the red candle body right there, and then you took your partial. You took it one more time to the long side. Now this long, it's not bad, and at the same time, I'm not sure if it's good. If you saw something on the level 2, that could be a good reason to take it to the long side. I only take these type of entries if I see good confirmation on the 2-minute chart, on the level 2. Why is that? Because it did a fake breakdown, drop down, pulled back, broke down, and immediately got bought back up into the range. So this is the first confirmation for me to take it to the long side, and then if I see something on the level 2, that would be the second confirmation. Good entry right there, and partial all the way up. This long here, I'm not sure I would have taken it. Oh, this was a short and a partial, I assume. Even the short, I'm not sure I would have taken it, because I see this buying pressure right here. It's squeezed all the way up above view up, and I would really expect it to do a higher low wave if it's strong, and then continue going higher. What's my confirmation to take it to the short side? The M shape. So it's trying to break down. It was a fake. It's trying to break up. It's a fake. Lower high, making a new low. That's my confirmation to take it to the short side, and that's what I actually did on CCL today on my second short. Oh my god, that's too much. CCL, come here. Drop down, came back up, drop down, not taking it to the short side because I assume it will do a fake breakout, came back up, fake breakout, and then it drops down. This was, by the way, my last exit right there, but unfortunately I exited and I took some position to the long side by mistake from this short, and I exited. But anyway, then it's coming back up. Look at this, higher low wave right here as well. It's breaking up with those waves into the daily level, and then it just drops down. That was the entry right there, not on the first leg, right here. If you took it to the short here on this candle, this wouldn't have been bad, because you're having a fake breakdown, then you're having a fake breakout, and it comes back into the range. Take it to the short side, put your stop loss up there, and then just try to get it. If you took this entry right here to the short, you would be stopped out. You could always re-enter right here after the second fake breakout. Now let's see what Peter did. Guild, I took it as a descending triangle. So let's see what you saw there. I could see this. This is a good confirmation right there. You see these guys dropped a lot, pulled back, selling wick right there on the 5-minute chart with a descending triangle on a smaller time frame. So he's getting on a sort of reverse ABCD pattern on the 5-minute chart with the confirmation a descending triangle on the 2-minute chart. Took it to the short side. Unfortunately, it didn't work really well. Did a higher low wave and got him stopped out. You tried it one more time to the short side, I see there, right? After this sort of M shape right there, but unfortunately it didn't work second time right there. Here I wouldn't have held to my original stop loss. Right after this week right here, I would have just bailed on it. So yeah. Then I like to see a wall which can't be broken, or I want to see a wall which was broken, but for some reason it came back into the range after it broke that wall. Yeah, Peter, that would have been a good signal to bail. You're welcome, and thank you everyone for being here. We're exactly and right on time. If you have any more questions, you could always email me. And guys on YouTube, thank you for sticking there with us. If you have any questions, you can always email me as well. I will type my email here and there. And that's it. I'm at beerbowtraders.com. That's it. And I am posting it in the alerts here. And have a good day, everyone. Thank you, Charles. Bye bye.